Hi, this is Alex Fensky, the Chicago Southland Homes team here at Keller Williams Realty, and I'm bringing you the May 2023 housing market update. And before I do that, I'm gonna surprise you with a surprise announcement. Did you realize that while I generally record everything just one take, I always screw something up with the recording, and I always have to go back and re-record it. So if you think these videos are just amazing and my delivery is like superb, it's because it's probably not my first time recording it. And so here, third time's a charm. This is the May 2023 housing market update, and I'm going to cover a few concepts that are key to understanding the housing market: housing affordability, supply, demand, pricing, and mortgage rates. We're going to touch on all that stuff. The local market stuff is for Northeastern Illinois. And so it's basically the extended Chicago metro area. And it's way more accurate than anything you'll hear on the national news, which is oftentimes going to directly contradict the things that I'm telling you about our local marketplace. But it's still not really specific to a hyper-local market. It's for the whole corner of the state. And I've been on appointments in the last 48 hours that were buyers markets with declining prices and skyrocketing supply, and raging sellers markets where everything's still selling above list, and there's less than 1 month of housing supply. So there's everything in between. I'm giving you overview information, but if you want to make real decisions, you have to contact me so I can help you with the specifics about your plans and your circumstances and your market. So with that said, let's get to it. The National Association of Realtors Nationwide Housing Affordability Index is a metric that takes into account median household income, median home price, and typical or average mortgage rate. And if a median income household could buy a home at a median price with today's interest rate and use a quarter of their monthly income to make the payment, that's the baseline for this index. That's 100. A quarter of the median income pays for the house. The nationwide index right now is just a little above 100, about 102, and it pretty much held steady through February. It's nationwide data. It takes a long time for them to put it together. That's the most recent I got. So through February, it remained pretty steady, just above 100. The Midwest, our regional index actually fell, so it actually became a little less affordable in the Midwest, from 147 to 142. But as you can see, 142 is still a heck of a lot higher than 100, which means that we are still by far the most affordable region in the nation, and almost double the index of the West, whose index is in the 70s. So meaning it takes double the chunk of a household income to make a mortgage payment there compared to here. So you might not want to move out west, but if you do, if you got to, let me know. We'll get you put with somebody out there. Anyways, let's talk about local market data. Starting out, supply. There is a drastic reduction in supply happening right now. It's probably not what you're hearing elsewhere. I'm telling you, I'm looking at the numbers right now, and I'll show you. So you don't have to believe something or someone. You can look at it yourself. So the first thing we're going to look at is the new listings in April. And so this is new listings in April. And you can see they're down 19% over just a year ago. Actually, this is the spot data. You can see how new listings are supposed to be going up from month to month. They're not. They went up and then went down. We're going the wrong direction. And here's a key point. I'm going to expand this out a bit. Look, it's so consistent, right? It's the same pattern every year, except this one little funky thing. Well, that was April 2020, because the whole government shut down the entire economy, and nobody put homes on the market because nobody was allowed to even go out of the homes. So in April 2020, new listings were like non-existent. But look at this. In April 2020, 13,303 new listings. In April 2023, 12,608. There's fewer homes came on the market in our marketplace last month than in April of 2020, when the entire government and the economy was closed. That's nuts. So it stands to reason then this is the lowest new listings figure we've seen in any April ever. That has led to a reduction in the total number of homes for sale to the third consecutive all-time low. This is not seasonalized data. This is single month data points. And you can see, back in 2013, we were 50, 60,000 homes for sale. As of the end of April, 13,303. That's weird. That was the same number on new listings from that number we just looked at. Totally unrelated, wild coincidence. Anyways, 13,000 homes for sale in our entire region. All of the Chicagoland metro, Rockford, Joliet, everything in between, 13,303 homes for sale, third consecutive all-time low. And it normally doesn't shrink this time of year. Look, it always goes up in the spring. It hits bottom in December, January, and it goes up all the way up to September every year. Then it goes down. It hits the bottom December, January, February. It goes up all the way through August, September. Every year it's the same pattern, except COVID broke it, and then we got kind of normal, even though it was all going down, and then we're broken again. So I'm not sure what to make of that, but there's not a lot of homes on the market, and there's not many coming on the market either. There's a challenge to that for sure. Let's take a look at demand. So on demand, we're looking at pending contracts, closed sales. Number of pending contracts is down about 18% compared to last year. So if we look at seasonalized averages, I mean, that is just a weird curve. But you can see that demand has absolutely fallen from when it was super off the charts in 2021. It's been falling since the beginning of 22, but it's not falling anywhere near enough to counteract the fact that there's nothing on the market. So closed sales are down too, actually even a bit more, 23% using a seasonalized average, 31% compared to April last year. But again, still not anywhere close to being able to put a dent in this issue of low inventory. Now let's talk about my favorite metric, the relationship between the number of sellers and the number of buyers, because we can track those each in a vacuum, but they don't mean much when they're not combined, because if the number of sellers goes down and the number of buyers doesn't, that's different than if the number of sellers goes down and the number of buyers goes down or goes up. They have to be taken together. And so what we do for that is we look at months of housing supply. And I'm going to seasonalize this. Here's months of housing supply. This says at the pace of sales right now, at the pace that buyers are buying, how many months would it take to buy up all the available homes? So that in that way, it measures supply and demand. You can see here that we stand at 1.8 months of housing supply, and it essentially has been between the same from 1.7 to 1.9 all the way back to November 2021, almost a year and a half ago. Well, actually, yeah, a year and a half ago. Housing supply months of supply has not changed. So while the numbers of everything have been in fluctuation, they've all fallen, supply and demand, to the point where the balance between the two is one of the few things that hasn't changed. So that's, remember, local market, because I was in an appointment just a couple days ago where it was about 8 months of supply and prices are falling. It's buyer's market. So, and then a day later, another appointment where there was under 1 month of supply and everything is sold. So this is an overall average. One other measure of the relationship between the two is the number of days to contract. And you can see that's been pretty darn flat too. We want to take the median, not the average of that. It actually went up to 10, but this is honestly like rounding, because they only do these in whole numbers. But it's been between 8 to 10 all the way back to July 2021, almost 2 full years. We've been between 8 to 10 days on market. It really hasn't changed. The question you're all asking is prices. What's happened with prices? Flatty McFlatterson. Look at that. No change since August 2022 when we're looking at seasonalized averages. Single month housing data shows that prices are down 1 to 3% per month compared to what they were a year ago. But again, once you seasonalize that, it's flat. It's been completely flat. So it's something weird to see when there's so much competition for homes. There's way more buyers than there are homes available. We just looked at that. You'd expect to see prices coming up, but there's that affordability issue. And so people are still having to compete for homes, but they're not able to do it by throwing an extra 20 grand on a list price. They just can't do it anymore. Inflation has made everything else more expensive. Prices gone up, rates have gone up, and people just can't throw the extra 20 grand or 30 or 50 grand on top of an offer. So they got to compete in other ways. Speaking of mortgage rates, let's talk about mortgage rates. You know what? I didn't pull that up. So give me a second here. Let me pull up my good old Mortgage News Daily. Mortgage News Daily will show you that the 30-year fixed is currently at 6.45%. Earlier it was 6.49. They change all the time. And I'll point out a couple things here that your government-backed loans, FHA and VA, are almost a half point lower. So you're actually getting better rates on those right now than on a conventional 30-year fixed. A 15-year fixed is going to get you a break of about a half point, maybe a little bit more, which is nice. Here's something super weird. Adjustable rate mortgage normally costs you less because you're taking on some of the risk that the lender would normally have to keep because the rate can change. Well, these days they're charging you more for one of those guys. How about that? So that's not something I've seen previously. Adjustable rate mortgage is not being offered at a discount. It's being offered at a premium. Speaking of interest rates, we'll touch on Federal Reserve. The Federal Reserve last met most recently yesterday, and at that meeting they raised the federal funds target rate by 0.25%, a quarter point. That's what they were expected to do. That overnight borrowing rate is now in a range of 5 to 5.25. It's the highest it's been since 2007, 16 years ago. They've been raising the rate a zillion times over the last year and change. It's slowed down inflation a little bit. It has not loosened up the job market, which sits at 3.5% unemployment. The Fed's talking about maybe pausing those increases for the rest of the year, as long as inflation continues to moderate and the job market tightness does not get any worse. So if they have to raise rates again, it just increases the risk that we tip us into a little bit of a harsher recession. They'd like to avoid that if they can. It's kind of a delicate balancing act with a gigantic machine that moves slowly. So we'll see. We'll see what happens with that. So at the end of the day, what are you supposed to do with all this information? If you're a seller, I think it's important that you acknowledge that prices are flat. And so there is competition for your home. There's short market times, but if you miss the mark on pricing, your home will sit there and it will not sell because buyers just can't get out of range like they were able to do for so long because of low rates. So you got to be really priced accurately for your marketplace. On the buy side, if you can afford to compete on price, more power to you. God bless you. Do it because you'll probably win. Most buyers can't compete on price, but certainly compete on everything else that you can. The amount of earnest money offering as is, closing timeframes, post-closing possession, whatever you can do. So you got to compete. There's lots of multiple offer situations out there. It is definitely spring in that regard. But I think most importantly, you need to be working with an agent who has the ability to identify and bring to you early market or off market house opportunities so that you can maybe not have to participate in some of those battles that are happening in everything that's the MLS. If you've got somebody that's in a good network and knows what might be coming through the pipeline or has the ability and the skill to work through some of the alternative sale channels, then that would be a good agent to work with. Just saying. Hint, hint. With that said, if there's something that we can help you with, I would love to. My team would love to help you. Drop us a message. Follow us on whatever socials you're watching this on. Let us help you out with your purchase, your sale, or your investment plans to build wealth by understanding all this stuff. Thank you so much. Have a great May, and we'll see you in June.